All right. Welcome back to the End of Financial Year Ready Challenge series. If you watched video one, you already know the 5 things you need to sort out now so you can get to the end of financial year without much stress. So you need a separate account, receipts organised, kilometre tracking, client documentation, and also a 15-minute weekly routine to get you on track, basically. But the important bit is knowing what to organise, and that's only half the work. The other half is knowing where is the money potentially leaking out, because there are things you do without realising that can cost a lot at the end of the year. And today we're going to talk about the 5 most important mistakes support workers make. And this isn't theory, these are real things that we see happening all the time. And the good news is they're completely avoidable. So before we start, if you like the material that goes with this video, a mistakes checklist, a kilometre tracking template, a home office calculation guide, just sign up here to get them. There's no commitment. If you don't want future emails after that, you can just click unsubscribe, it's no problem. So I'm going to introduce myself and my friend. My name's Kim Matthews. I'm the director of Scribe, which is an app that we built for support workers to write shift notes, do invoices, and help them to stay compliant. And this is Sam Jones. He's a chartered accountant who works exclusively with support workers, support agencies, and NDIS participants. Welcome again, Sam. Thank you for chatting.
No worries. Thank you so much for having me. It's always good to chat tax with you, Kim.
Oh, I love it. I live for our monthly tax chats.
Me too. Can't wait to get stuck in.
So we're going to just go through five questions. Let's jump in with number 1. Mistake number 1: meals and entertainment with clients. So tell us about that.
Yes. So a lot of support workers will come in and ask me if they can deduct meals and activities that they go to clients with. So for example, if they go grab lunch with a participant or they go to the movies with a participant, a lot of people will question if this is tax deductible. The flat out answer to that is basically no. All the time, it's not tax deductible. That's treated as a personal expense. The reason,
so no.
Yeah,
popcorn.
no. Well, you can have popcorn, but you just can't claim a tax deduction for it, really. So, I think some support workers maybe budgeted into their finances, or when they're getting ready for tax time, they'll budget in that they've spent all this time on meals and then all this money on meals, and then it's a bit disappointing when they chat with their accountant and they're not actually able to claim a deduction for that.
Why do accountants hate us so much? All we're trying to do is go to the movies and possibly have a nice slice of cake and a coffee.
Look, if it was up to me, if I was...
We're working. Aren't we working?
If it was up to me, I would say go ahead, claim it. But unfortunately, the tax office, they consider it a personal expense whether or not you are with a participant. The exceptions to the rules, like it gets... Yeah, the exception to the rule would be when you're actually traveling. Like, for example, if you're from Melbourne and you're going to Sydney for work, then meals may become tax deductible. It still depends on the circumstances. You have to chat with your accountant about that. But there are some circumstances where you can claim a deduction. A common one is if you're receiving a meal allowance for overtime. You'll report that meal allowance as taxable income, and then so long as the meals that you buy during that overtime are reasonable, then you can claim it as a tax deduction. Mm-hmm.
Yeah, right. Okay. So there is a little bit of leeway there, but we're not buying every lunch on every shift.
Absolutely. The rule is non-tax deductible, but I just mentioned that so that there are certain circumstances you might want to raise with your accountant.
Yep. Okay. And what about entertainment? Same thing. Can I claim my ticket to see Shannon Knoll at the King's Tavern in Caloundra?
Yes, same thing. Unfortunately, Knollsy tickets are not tax deductible either. Under basically all scenarios. I don't think there's any situation where tickets to a Shannon Noel concert are tax deductible. Don't quote me on that. I'm happy to find. Yeah.
Okay, all right. Look, is that one person be like, well, there was this one time in 2007. Okay, and so when we're not just talking about nosy tickets, we're talking about SeaWorld, entry to theme parks, zoos, that kind of thing. You can't claim that even if you're going there specifically with the participant as part of their support. There are other ways that needs to be paid for.
Yeah, absolutely. If it is something that your employer will reimburse, then, well, actually, I think we're talking about this a little bit later, but yeah, if it's something your employer reimburses, that's a different story, but yeah.
Different thing. So they could also have a companion card. I've come across situations where the participant might not have a companion card, but may be able to self-fund and pay for the ticket for the support worker to accompany them to whatever the thing is. So that's, everyone's different, but I guess the bottom line is that support workers are not able to claim tickets, entry, festival tickets, that kind of thing.
Yeah, so keep that in mind when you're making purchases with the participant while you're at work. Don't go crazy thinking that you're going to get a tax deduction for it. Yeah, especially if you're a new support worker, and you might have been told by other support workers, or you might have gone to the oracle of Facebook to get information, and very soon you're going to find out that you can't. Yeah, the ATO actually makes it very clear on their website about this sort of thing as well. So very true, Kim. Don't just believe everything you see on Facebook. If you hear something or see something, it's always best to go to the source, the ATO.
Yep. Right. Okay. Okay. So we had a bit in our notes here about what happens if you do claim those things. So say if you claimed, $2,300 worth of coffee and cake because you were working 5 days a week and pouching a coffee and cake every time you went out. What can happen if the ATO knocks you back? Is there a penalty?
Yeah, in most cases, you'll just have the deduction denied. If the ATO determines that you've been intentionally fraudulent, or that you've tried to claim ludicrous amounts that aren't tax deductible, they could potentially slap a 25% or up to 50% penalty on top of denying that deduction. So it's not something, it's not something you want to risk. The risk to reward ratio of claiming these non-deductible expenses, it doesn't add up. Yep, agreed. Okay, so that one's pretty clear. No coffees on shift. You can buy them and drink them. You can't claim them. Absolutely.
All right. Mistake number 2. Mixing up what your agency or your employer or client has already paid for with what you pay for. It sounds a little bit complicated, but can you walk us through a scenario where this might be?
Yeah, absolutely. The most common one would be training expenses or trainings that you've paid for, what your agency paid for. So basically the scenario you've talked about is when you're an employee, sometimes your employer will pay for costs for you, and other times they'll tell you to do a training yourself. If they have paid for the cost for you, or they have reimbursed the cost for you, you don't claim a tax deduction for it, because you're not the one who's copped the economic burden of having to pay for a training course, for example. If it is a course that you pay for by yourself and you don't claim a reimbursement and it is a tax deductible expense, then absolutely go for it and claim it.
So if you've done your first aid, for example, and you paid for it and you got the certificate and you got the receipt and you submitted it to work, they paid you, and you think, I've got this receipt, I could claim this again. That's a no-no.
It's a no-no, yeah. I mean, if you get audited, it's pretty easy for the ATO to see that the expense was reimbursed. And the company that you're working for, you better believe that they're going to be claiming that expense in their tax returns. So the ATO, they'll be able to see that you've claimed this training expense, the company you work for has claimed the exact same expense. So it's, and the consequence, it's basically the same as the last example. So high chance that you'll have the deduction denied, and if it's taken, if the ATO take the stance that you've been intentionally fraudulent, then they could slap penalties on top of that as well. Yeah,
okay. Well, I don't know if they're in a slapping mood this year, but they tend to be.
Yeah, let's hope not.
They target slappable entities every year, don't they? And they take a closer look at certain businesses, different.
Yeah, it's hard to predict who the ATO is going to be in a slapping mood for. It's best just to not put yourself at any risk, because you never know who they're going to be targeting or what's going to change. Yeah,
hopefully it's not support workers. Support workers haven't been especially popular in the news, so I don't know, I won't be taking any risks this year.
No, that's a good stance. I also shan't be taking any risks, but with that said, I'll also be making sure I get as many deductions as legally allowed. That's what we should aim for.
Fair enough. So just one last thing, I aim for that every year. So if you've paid for training out of pocket, for example, you're a support worker, you've paid for some training out of pocket. The training was you wanted to be a programmer of apps, for example. Can I claim that, or does it have to relate directly to the work that I am employed?
It has to relate directly to the work that you're currently employed to do. It can't relate to a future career path. So
I'm going to go off script. I know that you're going to love this question that we haven't talked about.
Please.
So let's say that the participant that I'm supporting them in training for their work, and their work happens to be they want to be a programmer of apps. Can I claim it then?
So your participant wants to be a programmer of apps, and to help your participant, you undertake a app programming course.
Yeah.
I can't see that would be tax deductible. The ATO would claim that there's not a sufficient nexus to income earning ability. They would say you can easily earn your income without having to do that course. There's the link to you making money, and doing that course isn't strong enough. And it's
Yep. Okay. All right. No loopholes, folks. So the same would be said for barista courses and stuff like that.
Yeah,
I guess.
Absolutely. Same thing.
Yeah. All right. Back on script. Okay.
Feel free to go off script anytime. By the way, I love the curveball.
Okay, mistake number 3, not keeping a kilometre record. So I see this all the time. It's the most talked about subject in the groups everywhere, basically about travel and kilometres. Support workers go from one client to the next, back to the office, off to meetings, home. How does all of this become a problem, or how does it get confused when it's tax time?
There are 2 ways of claiming motor vehicle expenses. One way is the logbook method, which requires you to keep a 12-week logbook detailing your personal and business travel. This method leads to a higher deduction, but it requires a lot more substantiation. The second method is the cents per kilometre method. This method is a lot easier to claim because you don't need a detailed logbook. You just need a reasonable method to show the ATO how you calculated it. So it's a lot easier, but it leads to a lower deduction, generally speaking.
So you're keeping shift notes anyway. You're probably recording your kilometres anyway in some kind of app or somewhere. So it's probably worth just putting that little bit of extra effort and giving it a go. I don't know. It's probably too late for this financial year. Maybe, is it? It is.
It's coming to the end of the financial year. Yeah, I don't know if we can squeeze 12 weeks into a month. No. But the great news is if you keep a logbook for 12 weeks, that 12 weeks will be able to be used for 5 years.
Oh.
So it just has to be 12 consecutive weeks, and that can be used up to 5 years. You can keep a logbook for the whole year, and if you do that, you can find whichever section of logbook gives you the highest business percentage. So some people might just want to do 12 weeks, call it a day, and leave it there, just take whatever percentage. But other people might want to track it for the entire year so that they can choose whatever 12-week period would lead to the higher deduction.
Yeah, for sure. I've got written in my notes that there are apps, something called Driver's Note and the ATO My Deductions app do that for free. So yeah, why not? And of course our app, Scribe, you can record your kilometres in there. You do need to put a little bit of extra effort in and record the odometer, I think. That might be something to bring for the next round of updates. But yeah, definitely worth doing.
Absolutely worth taking that little bit of extra time, especially the more expensive your car is, the more expensive the running costs for your car are, the higher deduction you'll get from the logbook method.
Oh, awesome. So if you're driving a Ram,
yeah, I'd probably keep a logbook for that bad boy.
Every second person on the Sunshine Coast has a Ram. It's very hard to park.
But with that said, sometimes the cents per kilometre method will actually give you a higher deduction if you have very low running costs for your vehicle. So that's also like something to keep in mind. Yeah, well, if you've got, when I was delivering pizzas when I was 18, I was using a secondhand Toyota Bomb, and I basically got it for free from my uncle, and so there was no depreciation to claim. Petrol expenses weren't that high. I actually would have got a higher deduction using the cents per kilometre method because like the cost of a service, the cost of petrol, when you multiply that by your logbook percentage, which was about 50%, it turned out higher being the cents per kilometre. So if you don't have if you don't have an expensive car or you don't have high motor vehicle costs, it might just be easier doing the cents per kilometre. But if you're unsure, keep a logbook, talk to your accountant at the end of the financial year, and whichever method comes out with the highest deduction, that's the one that they'll use.
Yep, doesn't hurt to do it, then you know for sure you're not losing any money.
Yep, absolutely.
All right, okay, cool. Mistake number 4, claiming the home office wrong or not claiming it at all. This is interesting because there's 2 potential mistakes here. Someone who claims like too much and then someone who doesn't claim anything or doesn't claim enough. So talk me through those. Yes,
this one, it's actually quite complicated, the home office expenses. You've got a couple scenarios. So we talk about a support worker who is working from home, they're doing admin work and they're writing shift notes, organizing their documentation. And if they work from home 15 hours a week, approximately, there's a couple ways they could claim this expense. They could either do the fixed rate method, which is the simpler way, where you just claim a fixed number of cents per hour worked. Off the top of my head, I think it's 70 cents.
Yep.
There's a lot to remember as accountants. And so
you're right, I think it's for 70 cents.
Okay, beautiful. You can claim that 70 cents, and that will cover the cost of like electricity, internet, like all the general working from home expenses. And on top of that, you can also claim for assets purchased for your house. So if you need to buy a desk, or you need to buy chairs, a new monitor, you can claim that on top of the fixed rate. What you can't claim if you use the fixed rate are things like rent or electricity, as I mentioned before, because that's included in that calculation. The other way is the more complicated way, similar to the logbook method. It's the actual method, the actual expense method. And so that is where you literally get a floor plan of your house. You determine what portion of your house is genuinely and solely dedicated to running a business. And then you work out the floor plan and whatever percentage of your business, or whatever percentage of your house is used to run your business, you multiply all your rent, home living expenses by that percentage. Did that make sense? Do I need to?
Yeah, I think we probably need to go over it again, but yes, it made sense. Okay. So I have a very small home office. It's very nice, but it's very small. So I would say 15% of the home is home office. So if I was going to claim, can I claim my mortgage expenses with that?
Yes, you can, but there are complications that come with that. Okay. The complication being that, whatever percentage you claim as a business expense, you will need to pay capital gains tax on that portion. Yes, okay. So it brings a whole nother basket of complications and compliance fees when we start claiming 50% of our house as personal and then 50% as business, because then when you go to sell, like usually there's the main residence exemption, but the ATO will say, well, no, only 50% of this house has been your residence. The other 50% of this house has been your business premise. And then you'll have to deal with all that. And honestly, honestly, like the extra expense that it comes from and the extra effort involved, generally, I don't think is worth it for most people. That's not a blank advice for everyone. I'm not saying don't ever claim it or use it. I'm just saying that generally speaking, the simpler way is just better. Avoid the headaches, avoid capital gains tax at the end. Yeah, more straightforward.
I reckon this is one of those ones that if you're not sure what you want to do, you 100% should go and consult an accountant before you make any decisions on this one.
Yeah, absolutely. You don't want to get slapped with, I keep using the word slap. Should I say, you don't want to, you don't want to have fines put on you. Yeah, I think getting a penalty from the ATO it feels like you've been slapped. Maybe that's why I keep.
Yeah, I imagine. I haven't had one yet, but I imagine.
Hit with a fine. No,
Yeah,
I
hit with a
haven't,
fine.
but
You've seen a lot of
hits,
people be
yeah,
slapped.
yes, and it's never a pleasant conversation when someone gets hit with a fine because they've made a mistake or they've done something wrong in previous years. So yeah, best
So
to just keep it simple and avoid that.
If I avoid that, so then this question I already know the answer to. I'm going to ask it anyway. So my home office it opens out onto the lounge room, and maybe sometimes I like to work on my iPad and sit on the couch and watch RuPaul's Drag Race at the same time. Can I claim my lounge room?
No, the ATO, they're not going to be accommodating with that request, because then by that logic, you could just go anywhere and grab your iPad and jump in your room. Yeah, the ATO is very clear on the point that they're very clear on the point that it has to be solely dedicated for business, and you have to be able to prove it in one way or another.
Right. Okay. So you need to set up. You need somewhere where you're doing your accounting, your bookkeeping, or whatever in your room, or a little space in your home where you can say that is where I do my work.
Yeah, absolutely. A good example is I've got an auntie. She's a speech therapist, and she has a room that she's got the name of her business on the door. She's got that room. It's full of like toys and equipment for the kids to play with while they learn to speak better. I know that's probably the worst.
Etc.
How ironic! I'm talking
speech therapist.
I'm talking about a speech therapist, and I can't even articulate that properly. But yeah, so she's got that area completely set aside, and then she also has a separate room with a computer that she uses entirely for administrative work as well. So those two rooms, she would be able to claim that. Yep.
Yep. Okay. All right. Yeah, I think that's pretty clear. But if you're not sure, if you're trying to figure out how to shake down the ATO for a little bit more money, if you think you can do it, speak to your accountant. Don't just have a crack.
Yep. Couldn't agree more.
So mistake number 5, not planning for tax. And I actually saw last night a post on one of the groups that was basically a guy freaking out who seemed like a new support worker, and he was like, oh my God, it's been literally keeping me up at night. If this was you, like, I saw you in that moment. But it sounded like he wasn't earning like stacks of money. He hadn't pocketed like 150 grand. So it sounded like it was going to be more on the borderline of having to pay tax versus not having to pay tax. But anyway, that is a big thing in itself, not planning for tax. Can you talk about that?
Yeah, so I'm going to go ahead and wager that this particular person, this was their first year as a sole trader or running a business, because I see it so often that people, they don't plan for the fact that they won't have any tax withheld on the money that they're receiving.
Yeah.
So an example is when you're an employee, your employer will pay your wages, but what you receive into your bank account is net of tax that has been withheld on your behalf. So just simple example, I've earned $100 in wages, my employer will pay me $70 and pay the ATO $30 in tax. So when it comes to the end of the year and it's tax time, I've already had that $30 paid. A lot of people forget to take this into consideration. They just see the money come into their bank account. They go, woohoo, we're making money and business is going well. And it comes to the end of the year and they haven't paid any tax. And even if you haven't earned a crazy amount of money, you'll still be liable for a couple thousand, $10,000, depending on how much you've earned. And that's a big hit if you haven't put any money away for it or you haven't saved that up.
Yeah, that hurts.
Yeah, it hurts. And And on top of that, if you haven't planned for tax at the end of the year, all right, so let's say you've earned $70,000, you've got $15,000 tax payable, right? What's worse is if you wait to lodge your tax return until the final date, which is 15th of May the next year, the ATO are also going to put pay-as-you-go installments payable for you as a business owner to pay.
Oh.
What does that mean, you ask, Kim?
Yes.
That's a fantastic question. I'm
Mind
glad you
reader.
asked. When you're a small business, you obviously the money just comes into your bank account. The ATO has determined that it's unfair for small businesses to only have to pay tax at the end of the year, and for employees to have tax withheld on them as they go. So what the ATO implements is the pay-as-you-go installment system. This system requires business owners to pay their tax in quarterly installments through an activity statement. The way the ATO estimates these amounts is they look at your prior year tax payable, and they say, all right, well, you earned $20,000 last year, therefore you have to pay $5,000 in tax each quarter to prepare you for next financial year. If you wait to lodge your tax return until the last date, that means there's 3 quarters of installments that the ATO will have backdated payments for, or backdated payables for. So for example, you've got $20,000 tax payable. You lodge your tax return 3 quarters into the new financial year, the ATO will say, okay, so you've got $20,000 to pay for last year, but you've also missed $5,000 installments for the September quarter, $5,000 for December, $5,000 for March. That means when you lodge your tax return, you've got a $35,000 tax payable that you haven't prepared for. I hope I haven't lost anyone with that sort of long explanation. It's not the simplest thing, but it is something we do need to understand.
Yeah, no, there's nothing simple about tax, but yes, yeah, I do understand. So it's different. Having a business is different from being an employee. As an employee, your tax, like you said, your tax is already taken care of because the business has taken it and they're meant to give it to the ATO. So you don't really have to worry about that part. But the business, if they don't give it to the ATO and they hang on to it, that's essentially what we're talking about, right? If you're and we're talking about BAS.
Business, activity statements.
Yeah, so you can find yourself putting it off, borrowing it to keep things going maybe, or for paying for other things, but at some point the piper must be paid.
Yes, absolutely. And the worst thing, sorry, I just had something on my screen. The worst thing we can do in this situation is to stick your head in the sand and put it off. You'd be surprised how understanding the ATO can be for people who are upfront about mistakes that they've made. If you haven't put away for tax, or you just didn't know, you didn't seek the right advice, the ATO are more than accommodating for payment plans, and they're accommodating to find solutions to help you pay so long as you communicate with them. If you don't communicate with them, that's when they start to get a little bit antsy and a little bit less forgiving.
They think you're going to flee to the islands.
Yes. Yep. Yes, exactly. Yeah, and they don't want that.
Yeah, fair enough. So, I mean, there's ways to do it. You can have a separate bank account where you put in, a certain percentage, like 30% or something, into the bank account, or you can even pay directly into your ATO BAS account with your BPay link. Some people do that, and that just keeps you honest, I guess, because it's very tempting if you need $5,000 and there's $5,000 sitting in your account. Yeah, it's really hard. Times are tough, so protect yourself from yourself.
Yeah, yeah, absolutely. Good advice. Yes, it's very tempting to want to spend money that's just sitting there.
Yeah.
And especially if you haven't planned for it and you don't even anticipate it coming up and you don't think there is a reason to plan, but there is.
Yeah, there definitely is, because you will have to pay it one way or another, and yeah, the less that you have to do with the ATO, the better. Just have a pen pal type relationship. You don't want to talk to them if you don't have to, but at the same time, if you've got an issue like this guy that posted, my first thought was like, oh my God, please ring the ATO and just tell them what you've written here.
Yeah.
And they'll be like, right, it's your first year, we get it. Let's sort it out and make sure this doesn't happen again. They're not looking to run you out of business. That's not what they're trying to do. Yeah.
No, they just want you to pay fair share of tax, and they want you to communicate. Communication is extremely important.
Yeah, that's right. I mean, fair share of tax. Unless, like, if you're running a mining company, like, I think you're pretty fine. You won't have to pay very much. But that's not a conversation.
Yeah. Look, if you're running a mining company and you're watching this video,
okay.
Yeah, I don't know how applicable it'll be. But anyway, back on the topic.
Back on track. Let's do some maths. If somebody makes all of these mistakes, how much are they potentially looking at in losing claims-wise each year? Let's assume that they're an average to high income earner. Maybe they're earning between sort of $80,000 and $150,000 a year in their small business. If you make all of these mistakes and don't worry about your tax and just hope for the best, what can you be losing?
Oh, that's a terrible scenario. If we're saying everything you've done wrong here, you've overclaimed all your meal expenses. Well, any claim would be an overclaim for meal and entertainment expenses. You haven't kept a logbook or tracked any of your motor vehicle expenses. You haven't prepared for tax. You've left all your taxes out, your lodgements outstanding. You've double claimed fraudulently expenses that your company's paid for you. You will be out a lot of money. I mean, it's hard to put an exact figure on it, but you will be paying tax basically on your gross income. So you won't have any expenses to claim if you don't prepare for it properly. And that's a really bad scenario to be in.
Yeah, and I actually believe people can get in that scenario just because of like the nature of the work and how busy it is and how emotionally and physically draining it can be. You don't have a lot left in the tank at the end of the week when you come home, and you're already putting your everything into support work to then have to be running a business as well. It is a lot. So I don't doubt that there's a lot of support workers who are missing out. So it's worth even if you just make time to meet with an accountant and get a plan together and do your tax with that accountant, you're going to be ahead. Yeah.
But just small things to keep yourself organized. I mean, kind of like that last video you posted with the 15-minute weekly routine. It's just like if you have some sort of process or system that you have in your head to make these things less difficult and time consuming and painful to think about, it'll just save you so much effort in the long run. Just put the time in to organize yourself now, and you'll save yourself so much money in the future.
Yep. And you can buy that electric scooter that you want. It's $5,000.
Yeah.
Everyone wants one of those, right?
Go for it. Yeah, you save so much in tax. You can
exactly buy that Birkin bag. Yeah, whatever it is. Yeah, it's worth doing it. I like to do my bits and pieces that I procrastinate while I am on the couch watching TV on my iPad. My wife hates it. She really hates it, but it has to be done. Yeah. That's my happy place, is my little couch divot with my iPad to do those little odds and ends and reconciliations and stuff. It doesn't take long, so I encourage everybody to get a routine going, and it's just part of running the business. Because if you don't do that, you may as well go back and work for an agency. Honestly, if you don't want to do those
Yeah.
little bits and pieces, it's heaps easier to just work for somebody else and not worry about it.
Yeah, and honestly, I see so many people who are considering just going back to working for an agency. Not that there's anything, I mean, that's fine. But it's because they think it's too complicated to work as a sole trader. It's really not. It is at first, it may seem difficult at first to get your head around all these concepts, but once you start and once you get into it and understand how it all works, it's really not as time consuming and difficult as we might make it out to be.
Yeah, it's a different routine. It's just a different set of things that you need to do to make it work. I agree. It can work really well, but if you
can do it.
About going back, I believe in you. But at the same time, working for someone else is easier. I say that as the person that people are working for too. That's encouraging, isn't it?
Yeah.
Okay, so all of these things are avoidable. I think that's the bottom line. Don't cross the ATO. They'll find you. They know where you live. I think that's all we've got. If you're watching this video right now or at any point in the year, you can start sorting it out. You can get in touch with someone like Sam. He has appointments available. You can book on his website, I think. Is that true?
Yes, that is correct.
Yeah, amazing. So we'll put the website somewhere here on the video, and then we are going to leave 3 resources with this video to make it easier for people. So the accountant handover pack checklist is as amazing as it sounds. The expense category list, support worker edition, and the ATO questions cheat sheet, which it's an interesting name for something with the ATO in the title as well.
Cheat.
So if you found this video helpful, share it with other support workers or send them our way. And if you need help simplifying your tax, as I said, Sam is fantastic. He works in this space, he's very knowledgeable. And if you need a system for your shift notes, scheduling, client management, invoicing, and everything else to do with your support work, Spark Scribe Shift Notes belongs to me, and I would love to have you on board. So leave a comment, tell us what you're finding the hardest. I think we have one more video left in this series just before we hit the end of financial year. So yeah, keep watching and we'll see you for the next one.
Awesome. Thanks so much for having me, Kim, and see you later, everyone. You can do it if you're an independent support worker. You got this.
Thanks, Sam. You're an inspiration.
Thank you. Bye-bye.